Lance Roberts here with 3 minutes on markets and money. A little bit about technically speaking, after a major rout yesterday, markets set to rebound here a little bit today. That's the good news. Let's talk about this in a little bit more detail. Yesterday, the markets actually finished up near their lows yesterday, and that was a little bit discouraging. Today, we're getting a bit of a bounce here. Markets are going to be up about 1,000 points on the Dow. That sounds like a lot, but unfortunately, that's only going to recover about half of what was lost yesterday. So a big decline yesterday, and that's going to be retraced here a little bit today. The big thing is, though, is to continue to watch what's happening with both the 50 and the 200-day moving averages. Those are going to start to converge here. The markets are very oversold, so seeing a bounce back here up to the 200-day moving average around that level is going to be likely here over the course of the next few weeks. But watch that rebound here, because this is probably where you'll want to start coming in to look at reducing exposure, reducing a little bit of risk to the markets. It is unlikely the correction that started a couple of weeks ago is over completely just yet. There are other factors now going on. We have a reduction in earnings coming. We've got slower economic growth coming because we've shut down global supply chains. Even if that's a temporary impact from the coronavirus, it's going to have a little bit more lasting effect within the economy, and this is going to put pressure on stocks over the course of the next couple of months, and really next couple of quarters. Also, the collapse in oil prices, that's going to feed through to the rest of the economy as well. So it's not just the coronavirus, it's now also the impact of collapsing oil prices and the impact of that on the energy sector, which is a major contributor to the employment, business investment. They make up about 25% of capital investment in the overall economy comes from the energy sector. And of course, lower oil prices also impact revenues of a lot of other companies. So we should get this bounce here, use that to sell into. One word here on interest rates. Interest rates hit an all-time low yesterday during the midst of the sell-off, but begin to reverse midday. And we are actually seeing some rotation out of fixed income back into equities, at least momentarily. But there's a decent reversal process set up now for interest rates. So take profits out of the fixed income side of the equation and look at potentially hedging your portfolio against higher rates. Rates need to come up here a little bit because we're really kind of too low for the economy at this moment. Right now, the 30-year Treasury is actually trading below inflation. That is the first time ever in history that that's occurred. But again, while stocks are extremely oversold on a short-term basis, bonds are extremely overbought here. As I said, stocks are very oversold here. On a daily basis, we're back to where markets have traditionally bounced. But importantly, though, when we start looking at weekly basis, this is where we get to levels of oversold conditions where you do see a better reflexive activity in the markets. At least we are very oversold on a weekly basis, and we are oversold on a monthly basis as well. So on a long-term period, this is one of the more oversold conditions that we've been on a monthly basis in quite some time. So we could see a fairly strong reflexive rally in the market. Ultimately, we may work our way back higher here, but most likely we've seen the highs for this year. So manage your risk accordingly. Use rallies to reduce exposure. In our portfolios, we're going to be doing exactly that. We've been reducing exposure. We'll look to take on some opportunities as we see those things develop. But again, we're more risk averse at this moment than not because of simply where we are in terms of the global economic cycle as well as the earnings cycle. So pay attention to the risk, pay attention to your money. We're not out of the woods just yet, but there is some opportunity here to take advantage of cautiously. That's 3 minutes on markets and money. Be careful, and we'll see you next time.